So the hardest part about being a beginner trader is making money while you're learning. In the next 5 minutes, I'm going to reveal a secret set of rules that beginner traders can use to turn their learning experience into a money-making machine. The first thing you're gonna want to do is take your wallet and set it on fire. Now, I say this because a lot of you are immediately gonna go start trading live right after watching this video. Now, that's not the point of this video. This point is to actually absorb and learn these rules that I tell you. And then once you can actually learn and understand these rules fully, then you can turn your learning experience into a money-making machine, because these rules are going to be able to apply to any strategy that you use. This isn't based on any strategy alone, but these are rules that will actually help you to be profitable as you apply the strategies that you've learned. So I'm going to tell you the first thing that you're going to want to do. Now, I'm going to tell you with a little bit of a story. So the first time I ever started trading, I opened up a live account right away. I deposited $50 into it, and the first thing that I did was build that $50 immediately into $500 within the first couple hours of trading. Now, obviously, after making $500, I was like, wow, I have a real talent for this thing. I'm gonna continue to pursue it. The next day, I was at $0. Now, here's the thing. I actually traded really well, but what happened was you can actually have what I like to call trade exhaustion. Now, this isn't necessarily because you are exhausted. What happens is after you've traded, enough throughout the day, like 2, 3, 4 hours, you start to actually start seeing things in the chart. It's kind of like when you're out in a desert and people start, hallucinating because they're seeing water, or they're seeing, some sort of oasis when they're in the desert and they're trying to survive. You start to imagine things. And the same thing can happen while you're trading. You can be staring at the charts for so long that you start to imagine these trades that are going to be profitable when they're really not. So in the first hour of trading each day, that's when you're going to be the most fresh. That's when your mind's going to be the most on point. You can actually see the setups that you want to take. But after those times, you're going to start to see trades that aren't going to work out too well. And this basically all comes down to greed. That's really what it's all about. The more greedy you're going to get, the more you're going to start to see, money that's not there. You're going to see trades that's not there, and you're going to lose a lot of money in the process of trying to make more money. So referring back to that story, I made $500 and I actually took some really solid trades. But the thing was, I started to trade more and more and more because I wanted more money for the day. But then I started to take these trades that weren't actually obviously the best trades to take. Now, if I put down the phone, I came back the next day, I already turned $50 into $500. Like, there's not much better you can do than that. Even then, trading back then, I was just mostly gambling. Like, yes, I was using some really good strategies that I learned, but it was mostly just gambling because I was over leveraging way too much. Now, the thing is, I ended up putting down my phone and coming back the next day and trading within that first hour again. I would have maybe been able to turn that $500, into 600 or 700 or 800, and then put down the phone again and then continue. You can't try to make all the money in the world in the same day, in the same trading session. It's going to take time. Time is going to be the biggest thing that will help you to make money. Okay, now this moves me on to my next point. Okay, so before we continue the video, if you're looking for a great broker to use, I would highly recommend trading with Henko Trade. Personally, been trading with Henko Trade for a while now. They are a great broker service to use. If you'd like to sign up with them today, go ahead and use my link in the description down below. When you're trading, you start to get this weird turning feeling in your stomach. Now, if you can relate to that, then that means you are a gambler. That means you are not trading properly. You are gambling. Now, I used to have this feeling when I first started trading because that's all I was doing. I was just gambling. Oh, is it going to go up? Is it going to go down? I have this feeling in my gut that it's going to go up. It starts to go down. Then you start to get that stomach turning feeling. Now as a full-time trader, I never get this feeling. I haven't got that feeling in so long. This is because all just comes down to technical analysis. It comes to a very specific set of rules that I have, a very specific leverage that I use, a very specific percentage that I risk. So it's all just basically come down to to this formulated way of trading. So there's no emotions involved. There's none of that feeling in your stomach involved. And that will help to save you a lot of money in the long run. So this is called a gambler's gut. Now, if you're experiencing this means you are going the wrong direction and you need to try to eliminate chasing that gambling feeling as you're trading. This will help you to save a lot of money in the long run. And by not trading like that, you're going to be taking better trades and you're going to be making more money in the long run. Like, yes, you might have a day as a gambler where you're going to be making like 100% on one of your trades, but then in the long term, it doesn't last and you're going to lose all your money. So the next biggest thing that can help is dropping the change up style. And now you might be wondering, like, what do you mean by this? Basically, when it comes down to it, you need to align yourself to one strategy or maybe two strategies if you can handle it, but best to stick to one strategy. Now, the change up style is that type of trader who's going to be taking every single setup they see, every single strategy that they've learned, and they're going to be trading all of it all day long. Now, you might be thinking, oh, if I can catch 5 different strategies in the 1 hour, I can make lots of money. Short term, you could get a few trades that happen to line up, but long term, it's not sustainable and you're going to end up losing all your money. It's best to stick to one specific strategy for the day. Now, maybe the next day you can trade a different type of strategy that you've learned or you want to apply, but it's best to focus yourself onto one strategy. And that's where you're really going to keep the consistency going. Okay, so this next point is going to be, it's going to be hard for a lot of you because I know, even myself, when I first started trading, I love to glue my eyes to the chart all day long. This is going to be a hard one to follow through with. So the biggest thing that's going to help you become a profitable beginner trader as you're learning is setting it and forgetting it. Now, this means when you take a trade, having a set take profit and a set stop loss and leaving it, not looking at it, not watching it, not keeping your eyes glued to it mid-trade. Now, I know this is going to be hard for a lot of you because for a lot of you, every single trade you take is like your little baby and you want to watch it and you want to tend to it and you want to take care of it. Now, this is going to lead to issues. Now, these issues are going to be you taking profit a little too early. Now, I know some of you have experienced that where you're up, let's say, halfway to your take profit and you're like, you know what, I'm okay with half of my take profit, I'm going to take profit right here, and then you close the trade and then it goes skyrocketing immediately way up to your take profit or even further, and then you're sitting there going, oh, I could have made money. Or it could be the opposite too, where you're sitting there and you're watching it and you take off your take profit and then eventually goes super high and you make triple your take profit. Now, right now you might be thinking, oh wow, that's good. It's good to watch it. So if it goes past your take profit, you can make even more money. Now, any experienced trader will know that they've probably done that before, waiting for it to go above their take profit, and then they don't end up taking profit where they originally wanted to, and it ends up coming all the way back down to break even. And then you're like, oh, maybe it'll go back up just a little bit. I want to make at least a little bit of money. And then it goes all the way and hits your stop loss. So not only did you miss out on making your hitting your take profit, you ended up losing the whole trade and losing money because of it. So the best thing to do is literally set your take profit, set your stop loss, set it and forget it. If it hits, it hits. If it doesn't hit, it doesn't hit. Now you might be thinking like, oh, but if I'm watching it constantly and I'm constantly taking profit, isn't that going to help me in the long run? No. It's not going to help you in the long run whatsoever, because you might be taking little profits here and here and here. But then when you hit your stop loss, it's going to be, losing all that money that you gained taking your profit early. The last thing I want to talk about here today is going to be, and this is probably the most important part of actually making money as a beginner trader. Now, a lot of people getting into trading will understand support and resistance and trend lines, but a lot of people don't actually understand the one thing that makes the market, and that is how the market actually moves. Like, why does price go up and down? Now, it all comes down to supply and demand, but a lot of people actually don't have an understanding of that. So I want to quickly break that down today. What makes the market go down, or what makes the market go up? Well, we'll start with going up. What makes the market go up is when there are more people buying positions than people selling positions. Now, this is because if you have 1,000 people wanting to get into a position, to buy a position, and you have only a few people selling their positions, like maybe like 10 or 15, that means all the people who are buying are going to be competing to pay more for it. Let's say there's a market of 10 people selling bananas and there's a market of 1,000 people wanting to buy bananas. you know, if they're going to be bidding for these bananas, they're going to be wanting to up the price so that way they get the bananas. You know, the bananas are going for, let's say, $1. They're going to be like, oh, I'll pay $1.50. And the next guy's going to be like, no, I'll pay $2. And obviously, if you're selling the bananas, you're going to let them fight it out to get the most expensive price. So that way, when you sell, you can sell your bananas now for like $10 instead of what was going to be $1. So when you have a lot of people, high demand to buy, price will move up. And the same goes the opposite for the selling. Now, if you have 1,000 people selling bananas and you only have 10 people wanting to buy the bananas, the price is going to drop from $1 because 10 people want to buy these bananas. They're going to be like, no, I'm not going to buy it for $1. You have so much of it. Like, give me a better deal. So then everyone's going to be competing to be like, no, I'll sell mine for 90 cents. No, I'll sell mine for 80 cents. So that will continue to lower the price and lower the price and lower the price. Now, the best part about understanding this is then when you can look at the charts and understand where the spots are going to be, where all the sellers are going to sell and where all the buyers are going to want to buy back in, then you can kind of have an understanding of where the market is going to go, where it's going to turn. Then you can kind of understand when you see the shift of momentum to being more of a buyer's market. And this is where you actually can start to enter and take your profit. Okay. So that pretty much sums up everything I wanted to explain in this video. Now, if you're a beginner and you're doing any of these things, try to eliminate them. If you're not applying some of these things I talked about today, start applying them and you will see a huge difference in your trading.